The dollar took one long, narrow pathway to the top, and that came with a cost to the crypto market as with other currencies trading against the fiat. Bitcoin, for instance, crafted its own path to the bottom, all in a bid to penetrate the flag support. While many may be quick to say that this support is still intact, take a closer look at a higher time frame chart such as the weekly. Here we could have a candle close below the trend line, which confirms a change of the higher low structure to a lower low. That means it shouldn't come as a surprise if your beloved asset tanks by 20, 30 or even a higher percentage overnight. Call it a self-fulfilling prophecy that prices move faster in bear markets than bull markets. I'm Grace Joseph and this is the Gracia Memoir Session. Bitcoin says it's not going down without a fight, and that has renewed the confidence of bulls in the asset. But that only means the number of people it will take down with it when it finally succumbs to downside pressure will be a whole lot. The longer the inevitable is stalled, the harder the dump will be, and at this point, we are better off having it happen sooner than later. I'll not ignore the fact that there are several bullish divergences on our chart, especially on the 8-hour and 4-hour time frames. These divergences hint that buying pressure is stepping into the market even though it's not currently reflected in price. While that's a good thing, we have to consider the overall condition of various markets and not only the crypto space. That's because the foreign exchange market has significantly impacted the crypto market this year. With that being said, study the DXY monthly candles close and you'll come to understand we haven't seen the worst of the crypto dips. The DXY closed above several monthly candles that have been unbreachable since December 2016. This translates into the first higher close in 6 years, which is quite the spectacle. Merge that with the US Federal Reserve's antics to boost the dollar's value while fighting inflation simultaneously, and you'll agree expectations are high for more leaps to abound from here onward. That aside, the entirety of the pattern on Bitcoin's monthly chart bears a close resemblance to the falling tree method, which is a continuation pattern hinting further downside move. This pattern will be confirmed if the current candle closes below January's candle. I'd also hinted last week that we have a bearish engulfing pattern on the monthly. While it's unarguably a bearish pattern denoting further price decline, it's important that the candle closes above 38.2k for the current range to be maintained. A maintained range might buy us more time until price has finally made a decision on where its next direction will be. Alternatively, a monthly close below 38k will push prices further to 35k, and who knows if that will be the last of it. We have till the end of May to see what price action will unfold. From the weekly side of things, we are still maintaining a higher low. That low needs to be intact for price not to decline further to levels such as 31k. So all you have to do right now is watch out for a candle close below that diagonal support. It will be your confirmation to exit losing trades, if any, and stay on the short side. That will be all for now until next week on another session on Gracia's Memoir. I'm Grace Joseph and you're onto the Gracia Memoir Session.